Let's talk F&O internals with Tushar Mahajan, Head of Derivatives. He represents Nomura. Tushar, morning. Good to have you back on ET now. What are the F&O internals indicating? Do you think in the near term the Nifty has hit some kind of a durable trading bottom?
Well, we've definitely seen a meaningful rise from the lows of what we saw earlier in the month, close to the 5,500 odd levels, and this has been accompanied primarily by a bout of short covering in the index futures side. Though if you look at the net numbers, you still see foreigners to have net sold index futures, so there might be some more space for short covering is what I think. On the option side, however, I think we've seen the PCR correcting very well from almost 1.4, 1.5 levels earlier in April to now evenly squared at about 1.05. I think that clearly indicates that, the market's a bit more confused with respect to the upside in the markets from current levels, though I would think that, people are equally well betting on hedging their positions for some time or, playing for the upside. I think, though personally speaking, my personal view is that we've seen the markets have a strong move over the last 2 days, primarily on the back of the correction in the commodity indices. Globally, we could see some more of that spilling over into the markets, but the upside from here may probably get capped around the 5750, 5800 odd levels.
Tushar, hi, morning. What about the downside though? Do you think around 5400 thereabouts we are protected, or could we, drift even further lower than that?
Personally, I think we are pretty much protected around the 5450 odd levels. That happens to be the gap of September, and I don't think we see markets going down below. We were very well supported even earlier around the 5500 odd levels, and I think probably another 1% from there. So 5450 is what I'm looking at in the short term, assuming things stay stable across the world.
Tushar, increasingly one is noticing the trend that it has been the banking pack, or the bank Nifty actually in particular, which has really come to the rescue of the market even on days that the market has fallen. Do you see that trend continue, and what levels would you monitor now when it comes to the banking pack?
Yes, I would tend to, agree that the bank Nifty is going to continue to lead the markets on the up move. In the short term, on the margin, you are seeing a lot of positive things around the banking space. Your inflation prints definitely point towards the fact that there could be another round of easing coming off. The current account deficit benefits that we are going to accrue with the correction in oil and gold overall is again interest rate positive. So I think the bank Nifty, which has been at the forefront of the move, should probably continue to do so. What we are also seeing is that this is a big indicator, it's a big component of the Nifty. The other big component, Infosys, the sector got so badly derailed by the Infosys results. Some kind of semblance today with HCL and hopefully something with TCS, I don't know about that. But the fact also remains that, with the kind of derating that the tech sector got with Infosys results, you saw some people realigning their portfolios to go overweight banks as well. And I would tend to think that, that's a trend which might just continue in the short term, until the RBI policy.
What I also understand, Tushar, is that there is a lot of, put concentration in and around 5600. How crucial is that?
Nikunj, frankly, I think that would always be the case. You'd see the most amount of put concentration around the at-the-money strike. So where the index is trading right now, as of close yesterday, we did see 5600, 5700 being the most heavily concentrated in terms of puts, and about 5700 and 5800 there. So what that effectively means is 56 to 58 is the range. But also these things change very, very dynamically. As if you see markets coming closer to those levels, you'll suddenly see that correction, that concentration shift to 55 and 59, depending on what kind of a move that is. But overall, if I combine the levels which we are seeing both in the April and the May series, to my mind, 5500 probably looks like a strong base for the markets in terms of the option data right now, and about 5800 odd on the upside.
Tushar, besides banks, what else could provide the apt cushion to the market to scale higher?
Interestingly, consumers, I think, they are still not giving up their gains, you would typically tend to think that if it's a beta-led rally or something like that, you would see defensives kind of come off. We've been speaking about valuations on the sector for a while. But I think that space continues to hold strong. And apart from banks, as a bigger component of the index, I think consumers could continue to be the big space. Oil prices, obviously, if they keep correcting, you've got the likes of ONGC, which could provide a nice cushion to the index as well. I would probably steer clear from technology and to some extent commodities for the moment. But oil and gas, consumers and banking is what I would look on the upside.
What about SBI? That stock also has seen quite a move in last 2 or 3 days.
Part of it in line with what we've been seeing in banking sector, and I think yesterday we had the chairman also coming around with some positive bids, and that continues to be the play. Also, we have to realize that in a falling interest rate scenario, some of these banks, the public sector banks, tend to have the bigger leverage in terms of improvement in earnings as well as the problem on NPAs. So we would continue, with at the margin, like I said, when things are improving for the banking space, we would continue to prefer, some of the public sector banks to the private sector banks. Though on the whole, or the overall pack, we would continue to be positive.
How are you approaching the beta part of the market? Metal stocks, ADAG stocks, is it time to buy beta into the portfolio?
That's a tough call, Nikunj, because, some of these spaces are still not out of the woods completely. And, when you're talking about a commodity-led correction globally, which is causing this fillip to the markets in India per se, I would probably steer clear from, from the commodity space. ADAG, again, each sector is a different, each stock is a different story altogether, so we'll probably look at it separately. But for the moment, we've got the banks, we've got the consumers to play around with, so, might as well take some of those safer bets.
Tushar, really good chatting with you, and hope we can do this more often. Good having you on the show today.